Hello, fellow traders. Tis I, the Rumpled One. Happy New Year. It is Tuesday, January the 1st. The year is 2019. Let's talk trading. Fresh start. The reason I'm putting this video out or making this video at this time is because the market's not open. It's going to open in about an hour or two. But I want you to see some of the new charts where they have a whole year's worth of data, because as soon as the market opens, everything's going to refresh, and you might not be able to see what I see and understand what I understand. And so we're going to start the year off with money and risk management. Risk, $1% willing to lose per trade. Now, I know there's one buddy of mine out there that really underwater. We're not going to let that happen this year now, are we? Nope, because we're going to have our position size set based on our stop loss, or we're going to have our stop loss set based on our position size. So we never lose more than we're willing to lose per trade. Okay, all the gaps filled again. I'm going to keep this screen because it's just one of those trades that, if you like to trade on that Sunday/Monday when prices gapped over the weekend, it's just something you can take advantage of. And I think we proved that over and over last year. So those of you who are timid about this trade, you should have the confidence now. You should be able to see it. Now, one of the new screens I showed you before was the year-to-date analyze. So you can see here we had we're looking at the monthly chart so we can kind of get a perspective here. So here's the year high and the year low, and I updated the HL5 indicator to do that. So, and also we have the multi-frequency GPS right here. So year, month, week, and day, so we can see where price is in relation to the open, the high, and the low for the year, month, week, and day. And this is part of the HL5 YTD indicator, just showing you where price is in relation to the open, high, and low. So you can turn that off or use that if you don't have this indicator, if you didn't donate back in 2014. And the pink dots are once again the previous month's midpoint right here, the previous candle's midpoint, just to use as a reference. You want to be short below that mid, and you want to be long above it. Just a rule of thumb. So, as you can see here, just simple, just 3 horizontal lines. And once again, when you're looking at the yearly open, if you were short below, you can see here it paid off. Of course, there's going to be some bounces off of the low, but you can see which way price was biased over the past year. And we can look at the dollar yen. You can see it came down excuse me, and made it all the way back up, only to pass through the yearly open. So one of the things we're going to be looking at are yearly open cross trades we could put on, and maybe they'll last a month, 2 or 3 months, and we can bag some huge pips with very little effort, hopefully. Not to say it's going to work each and every time, but some of the popular pairs out there, here's the euro. It made a nice run up, and then once again we can apply the same methods to the monthly chart as we do to the daily or the weekly and the hourly. The wick zone, it told all right here. It failed to make a much higher high, came in, take off some of the profit right here. As soon as that candle goes from green to red, exit out and save all of this profit. I mean, right here you gave over 100 pips of profit right there if you gave that back. So, but if you're going for the big ones, you might have to. But you can see here, really should have exited somewhere in that upper wick when it failed to make a new high. Okay, let's see. Pound dollar once again. You see here it failed to make a new high, came back down, should have exited that long trade. Here you could have picked up a nice short, or possibly right here you could have gone short out of that wick zone, even though you had been trading against the monthly candle color, but this would have been a much better short out of the wick zone there. So once again, applying the wick zones to the monthly can prove to be highly profitable. And what else are we going to look at here? Put that back to the euro. Another new chart here. I updated a couple of indicators, or actually this is going to be a 2019 indicator, so there you go, a little view to the future when the 29 donationals are ready. It's called First Day, and what it does is it'll give you the open, high, and low for the week, the month, and actually the open, high, and low for the first day of the week, first day of the month, and first day of the year. And you can put shading in there and turn the shading on or off, and you can have the side markers over there if you want. Sometimes I like to see the side markers, and they pop over there. That way you can see, you can have a look, see where price is in relation to these levels. So you see here we got the year high, the year low, and then here's day one of the year right there, and you can see how it was breaking out. So once again, using the first day as the opening range for the year and trade accordingly. And once again, just taking the bias and playing that with the wick zone. So if it's below the open of the year, then you just take all the wick zones whenever you can see a short out of a wick zone, you can take it. What do I mean by that? Well, right here, price came in the wick zone, so you just take all the shorts out of the upper and lower wick zones, and it would have been profitable. Yeah, hairy hindsight, but you see, we're talking about this now, so this is what we can work on this year. It's nothing really that different than what we've been doing before. I mean, the opening day, that's just basically an open crossover buy zone for the year. So the open for the first day of the year, first day of the month, first day of the week, that's what we're looking at to accomplish here. Use those as breakout ranges. Once again, nothing esoteric. I mean, if you want to, first day of the week, you can drop your own horizontal lines on there. Indicators just make it easy, at least for me. And in the dashboard here, I've updated it so it works with the year for the open, close minus open, high minus close minus low, high minus open, and open minus low. So these show you high minus open and open minus low shows you how many pips you can make taking those crossovers. As you can see here on the year, we've got hundreds and thousands of pips with only a couple of exceptions. So just trading using that opening, the yearly open as a bias, short below, long above, until the wick zone tells you otherwise. And if you catch that train or that ship when it sails just right, you could sit there and just let that trade ride for a while, you know, days, maybe even weeks. Just have to be smart about it. And when you're looking, if you look here, you can see here it came down here, and then you just kind of watch out for turn trades. So right here, there was a red green, but we're looking to go short because we're below that yearly open. And so you just see when that price turns, okay, it goes up, but it didn't. It came back down. You can jump back in that short. but you don't let the trade turn against you. So you use those turns as a indication where to exit. And you've seen this chart before. I'm keeping this one because we do look at the daily ranges and we do see how things happen on a daily basis. Once again, right here was a turn trade. So off the bottom, so you can, take that break of the wick zone. Once again, talking about wick zones. Inside bars, we're going to definitely look at these. So daily, weekly, and monthly inside bars. Once again, it's a horizontal line trade, nothing that difficult. We're just going to look for these inside bars and trade according to that price action. This is something people like to do, use the hourly inside bars on the hour. Well, we're just bumping them up to the larger time frames and taking advantage there. The buy zone, have to do the buy zone and keep that, because really everything is a buy zone, whether it's daily, weekly, monthly, or annually. Because when you have an open, the only way you get range is price has to move away from the open. And we know price ranges, so that means it's moving away from the open. So that's why you want to get in at near the open and at near the open price, and basically take the trade in the direction it's going and take your pips off the table when you can. Rat zone, it's just a staple. We may or may not look at this on a daily basis. Same thing with the pivots. Sometimes it's nice to know the weekly pivots, but we know we only had 2 missed pivots. Once again, a profitable trade. It's hard to turn your back on profitable trades. Price action, just because it's price action. And the wick zone, we've been talking about that. We're going to use it on different time frames. The holo, once again, we can do the holo, highest open, lowest open. In fact, there's another screen I need to pop up here on the highest open, lowest open. I just remembered that. Inventory retracement bars, may or may not keep those. Let me know if you want me to talk about those on a regular recurring basis. I know a couple people are using them profitably, and I'm thinking I just like this horizontal line, so I'm going to keep this one around for a while. The tick chart, we'll talk about that. And the Einstein line, we may or may not talk about that on a daily basis. So that's it, fellow traders, for a sneak peek into what's going to be going on in 2019. And I'll probably put out another video as soon as the market opens so you can see the changes. But you might want to file this video away so you can refer to it and you go, oh yeah, I see how that works. And in fact, I had a trader write to me, wish me Happy New Year, and told me how his trading's turned around since he found me. And what's kind of interesting is he said he shows people the dashboard and it just blows them away. But he was saying that basically when he saw how you just put a couple horizontal lines like the Einstein line, just how it just made sense to him, and he hasn't had a losing trade since. So, that's why I love the horizontal lines, don't like the squigglies. But it doesn't matter what you use, because it's not what you trade, it's how you trade it. So 2019, I want you all to drain the banks.